Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So in general, although of course we can't know that, I mean concerning the CPI report recently, but still the reversal has started precisely from the level that we have discussed recently. This is completion of the intraday XOP target round, the confluence support. So in general, that was just as based on the performance on the market, and as we calculated swings targets, we suggest that it should not be deep retracement, at least with the pattern of the price shape that we have currently, and following the market mechanics and the swings that we see on euro currency. So in a particular stage of the price progression, it should not show some deep retracement at this point. And that actually has happened. So we've got confluence, completion of the minor ABCD pattern on the intraday charts, and sharp right acceleration. On the daily chart, take a look, we even have got the reversal bar. Currently, market hits the overbought. With this performance that we see currently, it's fast acceleration with the reversal bar, and take a look, actually market stands very close to the target. So we have this larger ABCD pattern, OP stands at 102.76. I wouldn't exclude that within the today's session market could try to complete it because it stands relatively close. It's just 40-50 pips below the target. XOP around 104, it's probably the story for some longer period, because this is not just an overbought. So if we'll take a look at the weekly chart, you will see this also confluence resistance. It's 102.60, 103 area, and this combination, well, it could let market to climb slightly higher, just based on the impulse that we have here to complete the nearest standing target, but hardly it will be possible to continue upward action immediately. Speaking about the CPI report, guys, here actually you see the great example of the irrational decision making. Because in fact, if you will take a look at the numbers, you will see, I will show you it in the weekend, that, well, inflation hasn't become lower. And why actually it has dropped? There's two reasons. And first, it is calculated now to the October numbers of the 2021. And in October, this was a big jump, starting jump of the inflation. Since the difference between current October and October a year ago contracted, it shows you lower level of the percent change in year-over-year basis. But if you take the numbers, take a look at the numbers, you will see that it, well, not significantly has changed from the numbers that we've got in September. It's difference just because inflation in September a year ago, it was significantly lower than in October. And that brings to this result. This first moment. Second moment is that actually big part of the inflation has been contracted in the energy sector. But we know that, we covered this subject in our Telegram, as was a really big amount of the strategical reserves have been sold to control the petroleum prices inside of the country, and that has helped to control inflation. So that's why currently this reaction, it might be very soon turn in opposite direction. I would say that will happen this week or in next week, but reassessment definitely should come. This first moment. Second moment, you could see that big changes have happened on the anticipation of the rate change. If previously it was expected that will be 75 basis point in December, now it is 40% probability, at least based on the futures prices, that no change will be in December. The Fed will take the pause. Our suggestion, as we share with you in our research, is that we expect 0.5% change in December and 25% in February. We probably will not see the 5 level on the Fed rate, but this is well, future story. Currently, I just explained to you why we have got this change in the inflation, and this we suggest that it's a bit overreaction on the market. This is great, it gives great opportunities for trading, but from the fundamental point of view, nothing has changed actually. It's nothing to celebrate by far. But it seems that investors were waiting for these changes so long, and with the first signs that situation has changed, they were so tired from these expectations. They're just, well, everything, sentiment just explode, and you could see what has happened. So on lower time frame, so here we said that this is overbought. On lower time frame, take a look. Market also hits the predefined three drive sell pattern that we discussed previously. So it particularly stands at the target. Well, personally, guys, I wouldn't rely too much on this pattern, although you could see nice matching of the extensions. It's very accurate here. But because of the one major reason is that fast acceleration, especially on the top to the third drive. This is big challenge for failure of this pattern. It's just because, well, if you are watching for reversal pattern, it is not good if market shows really great acceleration right at the point where market should turn down. So from that standpoint, I would treat it with the caution. So maybe we should get some pullback here. I'm not really arguing about this possible retracement, but I wouldn't bet on well, completion of this pattern, which actually should be somewhere below these lows. So that's just for information that we have the pattern, but I wouldn't rely on it too much in the current circumstances. So we should not blindly following the just numbers that we have on the markets. We should also control the price shape and behavior and sentiment on the market is also important. That's why on the hourly chart, since we're still going to the major target distance, not really too far, we once again do not suggest that should be some deep retracement. Here is, by the way, it's also minor for the drive, as you can see. And from that standpoint, personally, I would consider some level around 101 maybe. 101, 101.20 is still just this range, just because this is previous tops, it could be retested. Second, would not expect deep pullback, and that looks acceptable in general. So let market after the pullback keep going to the target. Confidence from that standpoint seems not bad area for stop placement at the initial position taken, initial moment. So then if pullback will happen here, you could and should move stops to the break-even. So this is approximately what we intend to keep an eye on and see. Also, guys, be aware of this fast action, because sometimes it happens that it might be reversed really in a blink of an eye. This already happens, especially in the crisis environment that we have currently. But now we do not see something of that sort, and let's see what will happen. Let's follow with this plan and then see what will happen next.